A whiplash economic recovery from the pandemic has put a squeeze on the supply chain and has left retailers scrambling to restock shelves and consumers wondering if their holiday gifts will show up on time. But why are these supply chain hiccups still happening 18 months after initial COVID lockdowns? And what are companies doing to meet the high demand? I'm Alexis Garcia, and today we'll take a dive into the supply chain on this episode of Growth Stories. Before many of the products we purchase hit the shelves, they come into the country through a port of entry. And one of the biggest and busiest ports in the world is right here in Southern California. The Port of Los Angeles covers 43 miles of waterfront and handles everything from consumer goods like avocados, computer chips, and cars, to valuable commodities like zinc and scrap metal. Last year, 10.4 million shipping containers were processed through the Port of Los Angeles, setting an all-time record. And the National Retail Federation expects that there will be a 20% increase in import container volume this year. I drove down to the Port of Los Angeles on an early Saturday morning, where roughly 170 cargo ships were anchored off the coast waiting to dock and unload. In pre-pandemic times, that number was around 17. Backups at this busy trade hub have created an ocean freight traffic jam that has made getting goods in and out of the country more difficult, and has created a domino effect of mounting delays.
Warehouses are full, which means containers stack up at the shipyards, which means, longshoremen and truckers can't get them off the lots as easily. It's just a bunch of stuff kind of backing up and just everything just getting stacked on top of itself.
That's Investor's Business Daily reporter Bill Peters, who's been following the supply chain disruptions.
The chip shortage, that affects everything from the audio devices that go into Care Bears. I was speaking with some executives from a cookware company, even resin that holds a piece of foam in place in a knife box. That's become a supply constraint.
What is similar or different from the supply crunch that we saw in early 2020 when these first lockdowns first started happening?
It's really a continuation and an amplification of what started last year. If there's anything, it's just potentially more goods coming in and all those other problems compounding. A lot of the stuff that's in containers on ships waiting on the water right now is product from retailers that are just trying to make sure they have what they need to meet a holiday demand.
These supply constraints have frustrated American consumers and businesses. The problem has gotten so bad that in October, President Joe Biden announced the Port of Los Angeles would become a 24/7 operation to relieve supply chain bottlenecks.
This is a big first step in speeding up the movement of materials and goods through our supply chain.
Major shippers like FedEx and UPS and retailers like Target and Home Depot have also pledged to ramp up their operations to move more goods during off-peak hours. Coming up, we'll take a closer look at how supply chain snags are affecting both companies and consumers. Stay tuned.
Good morning, everyone, and welcome to IBD Live.
We're here to help you make more money in the stock market. On IBD Live, we give you actionable trade ideas every day. We follow the entire trade, buying, holding, and selling. We've built an amazing community of investors. They're excited to join us every morning, and we're excited to talk with them and take on the market.
Sign up at investors.com/IBD Live.
As we just heard, the explosion of online shopping and the post-pandemic economic recovery has basically led to a surge of stuff piling up off our coastlines and in our nation's warehouses. As the backup continues to grow, the cost to have goods shipped has also increased. As of October, Truckstop.com reported the spot rate to ship a full truckload of goods was up about 40% on the year to $2.39 per mile. And it's not just trucks. On the water, prices have also skyrocketed. The global average to ship a 40-foot container has tripled over the last year to hit roughly $10,300. And container shipping rates from China to the US have climbed as much as 500% to around $20,000. The rising cost of getting goods from factories to store shelves is putting pressure on the bottom lines of some of America's largest corporations. Here's Apple CFO Luca Maestri on the company's recent earnings call.
During the September quarter, supply constraints impacted our revenue by around $6 billion. We estimate the impact from supply constraints will be larger during the December quarter.
And Amazon CFO Brian Olsavsky had this to say on the company's latest quarterly conference call.
Disruption to the global supply chains and inflation in the cost of materials, such as steel, and services such as trucking, have also raised our cost of operations.
It's come up on a bunch of different earnings calls, just different supply chain issues. Anything that has to go on a ship, that is made overseas is going to run up against all kinds of knots. Anything that needs a semiconductor, a game console, clothing, best-selling books to some degree. It's kind of across the board.
And as the all-important holiday season approaches, big retailers like Costco, Walmart, Target, and Home Depot are going to extreme lengths to minimize disruptions ahead of the peak shopping period. These companies have taken the unusual move of chartering their own private cargo ships to make sure their products arrive in time for the holiday retail season. These dedicated ships can run up to $140,000 per day at a cost of around $20,000 per container.
Maybe for a fraction of your cargo, you can find a way around the ports of LA and Long Beach. Not every port has the resources to dock and unload larger ships. I don't know how much of a difference that makes, but if Walmart and Target, whoever, if they want to become, container liner companies to a certain degree, that's a big logistical puzzle. And whether they want to deal with all that'll remain to be seen.
Analysts say the biggest gainers from the supply chain shortages could be the companies that sit squarely at the crossroads of tight supply and rabid demand.
I think the biggest winners are still going to be on the ocean shipping side. Some of those companies are going to see massive profit increase this year.
But one group that's losing out on the supply chain crunch? Consumers. Scarcity combined with inflation have made prices go higher. Salesforce recently said consumers could expect to pay up to 20% more for goods this holiday season, and shipping issues will likely keep prices elevated long after the holidays are over.
Prices will be higher, but I think a lot of analysts generally think that customers have the money to handle it.
Thanks to things like cutbacks during the lockdowns, government stimulus checks, and a strengthening labor market, many Americans have been able to sock away more money. In fact, excess savings in the U.S. have climbed over $2 trillion since the start of the pandemic. And all that extra cash has led to a nationwide shopping spree as consumers continue to buy products at lightning speeds despite continued price increases. And all that demand could be too much of a good thing, putting further strain on the supply chain.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.